Hey, thanks for joining us today. This is Anthony, parent of IRS Medic, and we have a special guest today, Tom Groth, tomgroth.com. Tom is an alumni of IRS Medic. We had him here. We were lucky to have him for years, and I really enjoyed having him around the office. Tom is a great guy, a real thinker, and I think somebody who's truly concerned about the law is. And he brought this to my attention. I didn't want to read this. I didn't want to do this because it's such a depressing topic. And it really reveals the truth about what our government is and what the tax code is. The case is Poselli versus IRS. And this is really the sum of it. Well, Tom, why don't you give us your summary of this case?
I mean, I think, Anthony, thank you. And I think depressing was a good word to use for it. It's sort of I guess my summary high level is here we have the IRS blessing, the Supreme Court blessing an IRS initiative to go on a bit of a fishing expedition without any real guardrails that are verifiable by third parties or people who are independent to the scenario besides the IRS. It's giving them free reign without any actual oversight from anybody who might have a stake in disagreeing with the IRS and their collection activities, or they're just, information gathering in order to see if maybe someone's hiding something.
Tom, this is the scary conclusion that we reached. And so let's test this one out. Okay, so here's the conclusion that you and I have reached about this. So here it is. We're going to put this up for everybody. Now, and the Supreme Court has ratified this. This is from the highest law in the land, okay? The IRS can summon any records it wants in secret if one person has delinquent taxes, okay? So that's our conclusion, Tom. So you agree with that conclusion so far?
Yeah, I mean, they said that the banks could tell the account holders if they want, and obviously the banks have to know because the government is asking them for the question. But yes, they can look at my bank account in secret,
right?
And they can decide that maybe lawyers who have in this case specifically, it was a lawyer's bank account that they looked at in secret.
How dare they, right? I mean, it is. So I want to go, and I'm going to show the opinion here. Let's get to the opinion. And I mean, it starts off pretty sad. Justice Roberts, who believed, he found that Obamacare was a tax. And this is the thing. It's a 9-0 opinion, right? So they have no problem rallying around the troops, right? Conservative, liberal, they all seem to be on the same team here, don't they? Imagine that. What's really going on? So I think one of the first things that's incredibly obnoxious and glib beyond belief that just makes me vomit is a joke. Justice Chief Roberts starts off with a tax joke because taxes are funny. When someone is invading your privacy and taking all your money for reasons that you've never asked for, it's funny. So here's his joke. For as long as Americans have had to pay taxes, at least some have tried to avoid them. And for as long as Americans have avoided taxes, the Internal Revenue Service and its predecessors have tried to collect them. As an old joke goes, I believe we should all pay taxes with a smile. I tried, but they wanted cash. So that's the seriousness we get from Justice Roberts. So you could really see how concerned he is with the infringement of rights. It's just a joke. And so Tom, do you find that joke as funny as I do?
Yeah, no, it's it's hilarious. And I think it's sort of it's pretty common with IRS, with Supreme Court decisions on taxes.
Mm-hmm.
You can look back at a lot of cases that have come out since I've started my fairly young decade-long career. With taxes, you have them overturning Quill with Wayfair and giving more taxing authority to states to impose sales taxes throughout the country. You have them overturning, like different things like that. Double taxation is possible because of Comptroller versus Wynn, that Maryland case as well. That sort of creates a framework that only helps the government. And here we have, we have that as well. Privacy. I don't know.
Privacy. Well, and I think
maybe there isn't.
The common theme is always, hey, look, the Bill of Rights has to bend to the 16th Amendment. And, and not only that, it's like we ignored the Bill of Rights because, you know, in the here's a little choice paragraph from Chief Justice Roberts. Given the breadth of this power, Congress has imposed certain safeguards. Well, so we look to Congress to see if they're limiting their powers, because you know what, one thing that we could do, and I think it's from the beginning of this country, we knew that Congress would never outstep their boundaries. And so we left it to Congress to define the scope of their own authority, because that's really how the Constitution is founded. I mean, this is just hilarious as we have our conservative justices going along with this, right? And so here's really the outrage, guys. And this is what I'm talking about right here. Let's just go to here. The Fourth Amendment. What's completely missing in any of this by any of our constitutional scholars about this is any discussion about the Fourth Amendment. That is the right of their persons to be secure in their persons, houses, papers, and effects against unreasonable searches and seizures shall not be violated. Well, here's the thing. What unless taxes are involved. That's what this the Fourth Amendment needs to be. I think the Supreme Court just needs to put a little white out there and correct that. You know, you have absolute secure rights to be secure in your from unreasonable searches and seizures unless there's a tax owed.
Well, I'm sorry, I didn't mean to cut you off there, but you know, I think that you know, maybe the question is whether or not like, what if they send a CD-ROM instead of printing out the bank statements? I mean, I don't think they discussed it in the decision, but maybe it's just that obvious.
Like, what if they send a CD-ROM instead of
a bank statement? I would assume would be papers, but maybe if they send it electronically, the founders couldn't have possibly been thinking.
Oh, right, yeah, right, exactly. It's like the whole thing is about being secure in your persons, and I think that and effects. You're right. Effects would cover that, I'm pretty sure. And against unreasonable searches and seizures, and it's not even discussed. Yeah. Not even discussed. Not even mentioned. We don't need to. What the court looked to see if the IRS had the power to do this is Congress. That's their authority. I do remember a case, Marbury versus Madison. Do you remember that one in law school, Tom?
Yeah.
Yeah. I mean, not an interesting case, and I would say you know, a little shady in spots, but I recall in that one, that was the one that's like, oh, you know what? The Supreme Court has a judicial review over the constitutionality of laws that Congress passes. I believe that was one of the general accepted premises of that. Now, and Justice John Marshall is a hero for that decision. Doesn't seem at all something they're interested in here, and I think it's because. Well, let's just get down to it, right? Let's get down to it. Well, now, first, I do want to go back to the decision why we say what we say, okay? Because let's get down to actually what they're saying, okay? Because there's exceptions to the notice requirement. Now, if it's in the issuance of an assessment, the Supreme Court says notice is required. However, if it's in the collections of something that's assessed, the IRS says no notice is required. So, and what we mean is that if someone owes taxes and the IRS has a suspicion that you have someone else's bank information, has someone else's money, they can go, well, so-and-so owes taxes, you're behind. We think it's you. I don't know why. We just think it's you. Well, we don't have to notify you. We can just get your records because someone owes it. And it's our own claim of what is being said, because you don't even get a right to challenge it, right? Right. And that's the thing, Tom. Because that's what, you know, our present, you know, our again, let's go back to the premise we started. The IRS, the Supreme Court ratified that the IRS can summons any record it wants in secret if one person is delinquent in taxes. Okay. So the IRS is so there's no one disagreeing on the summons. Right. So whatever the IRS is saying is accepted as true, no matter how wrong it is.
Arguably, there might be more due process in a FISA hearing than in this sort of circumstance.
Yeah, exactly. And it's all because somebody in the world owes U.S. taxes. Therefore, the Fourth Amendment just needs to go away. The right to privacy goes away because someone in this world owes them some money. We're getting some comments here. Let's just check in on these here. Yeah, here we go. Right. So here, great comments here from Suzanne. Good afternoon. Good morning. Well, it's still morning for us, Suzanne. I can remember when a warrant was needed on issued on evidence. Seems to recall from citizenship class. Yes, exactly. Something to do with the Constitution there. It's just, yeah. I mean, it's getting a little much. And now this is always the problem I had with it. I remember there was a I can't remember it. The book I read. It was about a hedge fund manager who was charged with tax evasion. Really well-known guy. He's a trader, and he was picked up in Australia for the evasion of taxes. Well, he ended up winning the case because his CPA actually did his returns. Like, oh no, you have some big losses. You don't owe taxes. So he was able to escape tax evasion by not owing taxes. But he had one line in there that was just fascinating, and I loved it. And he said, he goes, it's an African folk saying, and it's something like. And he applied the analogy like this: expecting justice from the Supreme Court on tax issues is like corn expecting justice from chickens. And yeah, we are the corn and the Supreme Court is the chickens. Now, the fact is there's actually a law that applies against this. There's actually a law, 28 U.S.C. 4055, disqualification of justice, judge, or magistrated judge. We go to this, any justice, sorry, you nine, this applies to you. This law applies to you, folk. Any justice of the United States shall disqualify himself in any proceeding in which his impartiality might reasonably be questioned. Well, guys, where do you get paid from? Is that the U.S. Treasury you're getting paid from? Is that who they get paid from, Tom?
I mean, I think that like probably what's maybe being left unsaid here or not is that the Supreme Court thinks it's pretty reasonable that all this is just very reasonable. I mean, their employer who writes them checks is trying to make sure that they don't run out of money so that they can keep paying them. It's reasonable to figure out where that money might be, no matter how many people's bank accounts we have to look at. And it's actually reasonable for us to figure out where that money might have been at some point. Yeah, I'm not sure. The only question I guess is going to be, is it going to be reasonable to then use that information that you gather to prosecute people for, failure to pay their taxes? Because that's something that the IRS has been saying they're going to be doing, is going after people for tax evasion, failure to pay. They've been saying that for the last 2 to 3 years and warning people, because we all know that failure to pay is rarely actually prosecuted. But once
it is right,
collapsing them and turning in just what's an aggressive collection machine into an aggressive collection machine that operates more like states do and says, hey, we'll just throw you in jail if you don't pay.
Well, and here's the other thing too. So it's like, okay, so maybe Mr. Poselli is committing tax evasion, the frustrated payment, which, as you say, isn't often prosecuted, but that too counts as tax evasion. So let's say that the government has an interest here. Oh, this is really bad. We have someone, intentionally evading payment of taxes. So the question is, well, that seems like something that criminal investigations would be appropriate for. So why are we breaking our civil? Why are we throwing away our civil processes, civil rights, because someone's committing a crime? Because you have all different tools that come into place, all the tools that you're looking to get in a criminal context. You could get these. You could get all. If you want to say, and then you could charge. Hey, look, if that law firm, if the wife is involved, they too are part of the conspiracy of aiding and abetting. They have Section 8, they have Title 18 charges against them as well. So it's very interesting. It's the Supreme Court is acting like, oh, well, that's, if we don't do this, the IRS is totally out of luck here. Nope, they could have elevated if Mr. Poselli was actually evading taxes. If they actually had a better claim, you would think they would just say, well, you have a pretty rock solid case here of tax evasion. The numbers are huge, so why don't you just do that instead? But here, instead of doing that, which makes you think, instead of choosing the laws that they could in a way that would be, I would say, okay, I don't necessarily agree with the laws, but I could see the logic of, okay, someone's criminally charged. Yes, we're going to go and we're going to, issue subpoenas against people to, the grand jury is going to get these things. So it's not like the IRS is without remedy here.
Right.
But anyway, so we have, so I think, what's the analogy, Tom? What's the analogy here? If you get paid by, let's just say I'm a judge, okay? And I'm a judge and you know what I am? I'm an arbitrator. I'm an arbitrator and I decide on car warranties. And I'm decide about which car warranties, if your car warranty is valid or not. If you have a lemon, actually, I did this years ago. I was a certified arbitrator for the Better Business Bureau as part of their lemon law arbitration. Now we were paid through Better Business Bureau an arbitration fee, and it was the fees were paid by both parties. But what if I was paid by just one? Oh, you know what? It's the car warranty company that pays my fee. How do you think I would rule again and again and again?
Well, you're probably going to want to protect that relationship if that's where you're getting all of your business from.
I think you're right I think that's exactly where I would want to do that. And this is the other thing too. Let's suppose, all right, Tom, let's suppose that you get on the Supreme Court. Okay, congratulations, Justice Groth. Congratulations on that. And, as a true American patriot, you're going to say, you know what, guys? You're going to say, you know what? I think we should recuse ourselves from all tax cases, and there needs to be an independent tribunal that doesn't have it doesn't have anything to gain or lose by this, that needs to be appointed to see these. How popular do you think you'd be by your fellow justices? How popular do you think you would be? Do you think that's something that you could actually do without getting ostracized and alienated?
Well, I'm not sure, but I would, I would have a lifetime appointment and a guaranteed salary, I guess, as long as the government can collect their money.
I think you would be impeached because you're breaking the number one rule of Washington, D.C. You're not giving more power to Washington, D.C. They're all on one. I mean, that's just hilarious. People actually get upset about conservative justice and liberal justices. It's one team. It's one team again and again and again.
Well,
one
interesting thing is that the Supreme Court, I think, has found standing in a lot of questionable scenarios recently based on some, legal podcasts I follow and everything. But here, this is really kind of a case about standing. I mean, the bank told the law firm, hey, IRS is asking us for your records because of this client of yours. And we don't even, can't really tell from the decisions, how specific the request was, but the sort of the thrust of the decision is that they can be pretty broad. So maybe they can say, well, we just need to look at a lot to sort of figure out what we're looking at. So please send it all to us. And that's probably okay.
Here's really the facts of the case. We probably should have glossed over these so quickly, but so here's essentially what we have. For multiple years between 2005 and 2017, Remo Poselli underpaid his federal taxes. After investigating, the IRS determined that Mr. Poselli was liable for the unpaid amounts and other penalties, and entered official assessments against him totaling more than $2 million. Revenue Officer Michael Bryant then set out to collect the money, and he developed a few leads in search for assets that Mr. Poselli may have been concealing. Bryant focused on bank accounts belonging to Mr. Poselli's wife, petitioner Hannah Carcho Poselli. Okay, now, so one question that came up right away is I was like, wait a second, would it matter if this is a community property state that we're in?
Okay.
I don't think we are in because we're what circuit? Oh no, this was Ninth Circuit. Which state? What state is this in? And there wasn't any discussion about that though. I was looking to see if they had any discussion about a community property state, and I couldn't find it. I'm trying to look to see what circuit it is. Anyway, that's just something to think about. Yeah. Because I'm thinking if it was a community property state, they would actually have to summons her. They would actually have to notify her. But it not being a community property state, well, it's not her property.
Well, but
if it is her property, then they would have to give her notice.
But they didn't have to summons they could have, for the collection of taxes, I think they could summons Mr. Poselli's bank account records without telling him. So if it was a community property state, probably more along the lines of them being able to do that. Because one of the exceptions here is even a fiduciary is the other exception. And the court talked about how that's not superfluous. to have an exception to notifying a fiduciary because that's different than just a random third party. So it's actually, I think if you're actually more connected to the taxpayer, sometimes for the collection of taxes, they can still sort of look at your bank records without telling you and giving you an opportunity to quash.
Yeah. Now we moved. So here now this is what happened. The revenue officer then issues several addition summonses seeking records concerning Mr. Poselli. Brian issued one summons to Wells Fargo requesting financial records of both Mrs. Poselli and Dolce Hotel Management. So not even looking. So there it is. He's not even looking for anything, for the taxpayer, but rather there it is. He also issued summonses to J.P. Morgan Chase and Bank of America, seeking, on other things, copies of all bank statements. Brian did not provide these notices to any of the third party named in the 3 summonses. But the banks did, and Mrs. Poselli, Jerry R. Abraham, and Abraham and Rose filed motions to quash in federal district court. The district court dismissed the case.
Right.
That's what you're getting to right there.
Yeah, that's what the Supreme Court is upholding. I know I sort of lost my train of thought in the middle there, but the district court said no standing here, no subject matter jurisdiction, because you didn't have to get notice. So it's sort of like not getting a notice of deficiency or getting one. You need to have a notice of deficiency to get into tax court. But if you don't get the notice, maybe you can file late sometimes or dismiss because you didn't get the notice. You still have some sort of standing to contest it, right? But you're only really entitled. You can only get into tax court if they were supposed to send you a notice of deficiency.
Right, and so let's go. All right, so let's go back to our premise here. Let's go back to what we said is going on here. Let's go back to our premise that the IRS can summons any records it wants in secret if one person is delinquent in taxes.
Yeah.
There it is. Yeah, right. It's still true. And then you can't even challenge it because you don't even have standing to challenge it because, hey, look, someone owes taxes.
We all know that that revenue officers don't ever overstep what they're required to do because, the concurrence was a little bit concerned, I think, that it just seemed that they were making this wide open decision that you could look at anyone's bank accounts. They said, well, IRS has rules that they have to follow. So it's okay.
No, this is what I would say too, and this is, I think, this is the big issue going on right now. I talked to someone in New Haven, revenue officer in New Haven, who 2 weeks ago, and I was talking to her on a case. She goes, "Oh, by the way, I'm going to be on a leave of absence for the next year or so." I said, "Oh, okay." I'm figuring, hey, she's on maternity leave or something like that. Well, she's a mother of sorts. She said, "Oh, yes, my new detail is we will be training. Get this, Tom, 7 new revenue officers in New Haven. 7."
Hope they get the lesson on no in-person contact if somebody's represented.
Yeah. Oh, right. Yeah. Exactly. Yeah. Exactly. Yeah. So, this is the problem. So right now, I think they're still doing their orientation. They're probably still doing their 2 weeks of training in Buffalo or wherever it is. And now look, if that's New Haven, what's going on with the other field offices? I'm imagining the same amount of hires. And by the way, folks, that nearly doubles. And I would say does double the active revenue officers in New Haven. And now the ones that are there, they've been there for a long time. At least there's the new hires are at least 10 years old, and a lot of them are older than that. And so you have a bunch of old timers and a whole bunch of brand new ones getting trained. And now those new ones going to orientation. Do you think they put this? Do you think this decision is now put into that training for all these brand new revenue officers?
Yeah.
And you think the training is here's how you can get records in secret. Okay, if you suspect so-and-so and then don't, and here's the thing, you don't have to worry about any of these people challenging you because they don't have standing.
They won't know, or maybe they will, but even if they do, it's okay.
It's okay. It's okay. So, that's what's crazy because when the others where is the language? Where's the language that sort of limits the IRS? We say, okay, IRS, we're going to give you this power here, but don't go crazy. Don't go crazy. Where is that? Is it in?
I mean, I was talking to you about this before the show. There was this the IRS used to take this stance when you're getting somebody into currently not collectible status, which was basically, yes, we know that we'd have to release a levy if we levied, but we're not going to put a hold on the account and prevent ourselves from levying them until they filed all of their tax returns. And I would always say, okay, but there's this case called Vinatieri, and in that case, the tax court or whatever, it was appealed. They found out that that's an abuse of discretion for you to say that you're not going to put somebody in this hold status. And the IRS used to say all the time, if you had what's called an equivalent hearing in appeals, which means that you're talking to their independent office of appeals, if you had an equivalent hearing, they would just answer you and say, or even the collections people would say, yeah, you could file for an equivalent hearing, but you can't appeal that to an actual court. So we're just going to do something that's an abuse of discretion. And they would just basically like say that, like a court said it's an abuse of discretion, but since this case is no longer appealable to a court, we're just going to do it anyway. And so that's sort of the same kind of thing that happens with something like that.
Well, yeah, and then here, so to back that up, Tom, here, this is kind of where the problem right here. Consider the case. The IRS's investigation suggested. Oh, suggested. Okay, well, that's nice. It's suggested that Mr. Polselli often uses other entities to shield assets from the Internal Revenue Service. Okay, so now that would be a factual assertion. Okay, that would be a factual assertion that would probably go into an IRS summons. The question is, who gets to challenge that assertion? Nobody.
No one.
Nobody can challenge that assertion. Nobody has standing. Hey, look, as long as the IRS suggests that somebody may be using other entities to shield assets from the Internal Revenue Service, I mean, or maybe he has other entities. Maybe that's also the truth too. Well, look at this guy. He's got all these entities. What the heck is this all about? Maybe he just has a lot of entities. Is that a crime?
And the court specifically decided here in this case that it didn't really matter that they didn't adopt that interest test, right? That the Ninth Circuit had, which means that they don't even have to allege or suspect that the bank account that they're looking at has any money that belongs.
That's right. Oh yeah, right. That was up here. Yeah, thank you, Tom. Yeah, right. That was right up here.
So it's enough to say, hey, we might find something out that helps us find out if he has another business or if one of the businesses that the law firm represents is one of his businesses or not. So we're talking about like an absolute intrusion. You're going to have IRS people looking at transfers coming in to my bank account, right?
Yeah.
Seeing if I use, for example, I use M&T Bank. I assume that they have some.
I think your data was breached. I got the notice last night.
No.
So yeah, you might want to check. Who knows, right?
My IOLTA account which is good, but it also means that I actually tag transactions to individual client matters.
Yeah. Now I want to get to the point right here. There was something I saw where, well, why did they summons the law firm? Well, they wanted to know how his fee was paid,
right? Or if it was paid from a business that wasn't him. So think about how much they need to look at to figure out to even sort of surmise if this
legal fee
was paid on behalf of him or not. Like they have to look at other things too. And, they probably find out when they're looking at other things that this law firm has other clients. And what are they going to do? Are they just going to, pretend they don't see that information about the law firm's business dealings
so every one of their clients, no matter who they are, whether they have tax issues or not, is opened up because one of their clients owed money to the United States government. One of them. And that means the government can now subpoena the entire, who else do you have as clients?
Yeah.
Who else do you have there? Oh, we won't look. And they don't get notice either. But they don't, all of those clients.
But the IRS has an internal guidance and rules that they have to follow about not going on a fishing expedition. So it's okay.
And the Supreme Court has no power to hold them back. But the IRS, we can trust them.
Yeah.
I mean, we could trust them because they've been nothing but upfront and honest with all of us over the years, and they've never been embroiled in scandal after scandal of abusing the tax system to get at people. They haven't been doing that whatsoever.
No. It's not open
God,
season.
I haven't. Oh, you know what? Okay. Oh
It's
God.
not open season for vendettas or people with a chip on their shoulder. Definitely not.
So let's talk about. Oh, here's a fantastic little quote here. IRS investigations are much like any other. A detective might order forensic testing or speak to witnesses to help identify a culprit, even if those activities are unlikely and of themselves to solve the crime. Well, that's a heck of an analogy. Is this a criminal proceeding or not? You see what they did? They conflated it. Well, but the IRS isn't proceeding criminally. Why are you using a criminal analogy in a civil situation?
Even to the Supreme Court, people who don't pay their taxes are assumed to be criminals.
The worst, right? They are the worst. They are the enemy. You are limiting the power of the government to control you. And then I don't even know what this is. This is one of the oddest analogies I've ever read. And I tried to understand it. I couldn't quite get it. So here's this everyday tasks illustrate the same point. A recipe might help a chef shop for needed groceries, even though more steps are required before dinner will be ready. Okay. What? What? So
it might help.
What's the point? By conflating activities that help advance a goal with activities should accomplish it, petitioners ignore that. I don't even understand what that analogy is supposed to mean. It's so dense and inappropriate. Yeah. Anyway, so again, let's go. Here, the IRS can summons any records it wants in secret if one person owes delinquent taxes, and I think when we say any records, that means any other person's records, and like all of their clients. That IOLTA information. IOLTA stands for Interest on Lawyer's Trust Account, by the way, for those of you, and that's where we put our clients' money, which earns interest for other people. It earns in Connecticut. Our money goes to help people who are defrauded by attorneys, which often happens way too much. It's just incredible here how when it comes to taxes, right? They are just jealous and they're envious of anyone gonna take away your power to tax. And it's just, oh my God, it just goes on. But there's, again, you know what? There's no discussion about the attorney-client privilege in here as well. Mm-hmm. As far as we know, the how we determine what rights you're entitled to is we look to what the IRS does. If we look to what the IRS does, then we can sort of frame out the rest of the rights you might have, if at all. Because if someone owes taxes, well, your rights really, that's really, it's like a collective crime, right? Hey, there's one person owing taxes, so we can breach the privacy rights of everybody. So, hey, make sure you all pay there. Tom, we got to go. So I want to know your concluding thoughts you have on this one.
I think it's a bad decision.
A little bit, yeah. A little bit. And I think not only that, a bad decision, but at a bad time.
I mean, sometimes I wonder what might be wrong with me for not agreeing with the entire Supreme Court. But I just don't see it. I don't understand. I don't understand why we need to be giving the federal government. They already hired a bunch of more agents. They're streamlining their technology, so they're going to get better at picking stuff up and doing their actual legitimate job of investigating things. They don't need this extra power to do their job because they're getting a lot more support and information, and they're just going to get better. And really any tax system should be trying to balance between people's in general and actually getting the bad guys. And we shouldn't be put in a situation where people can pick who to put pressure on. And that's kind of the situation that we're in here. We're empowering individual revenue officers to make value judgments on who they like and want to pursue and who they don't like, and giving them an extreme amount of power to actually go and grab as much information as they want. Maybe they don't like your lawyer, so they're going to look at his bank account because they don't like the way that he talked to you. Come on,
Tom. Well said. Well said on that. That the amount of power and discretion, unchecked, that the Supreme Court just handed to revenue officers who have brand new ones with no training. And you don't need to have an accounting degree. You don't need to have a legal degree. Any 4-year degree Any 4-year degree will do it. So, you could be, art history. Hey, that's great. You could be a revenue officer, and here's a whole bunch of power. And hey, yeah, if you have an axe to grind with anybody, you know what, you can get retribution against them. So it's really not a bad job. Great comment here from David W. DeWitt. Unless I'm wrong, wasn't it the income tax ratified under Taft for American nationals, or am I wrong? Well, you are wrong. It was Wilson. Taft would never do such a thing. And well, this just sort of brings me to my point. And as we see the Supreme Court rally around the troops for the U.S. tax code, for years, Tom, and I don't know if you were on this one, and I don't know where you still are, but I used to believe all those, those tax protester arguments that the 16th Amendment wasn't properly ratified. I discounted those. I said, come on. How could the government lie about that?
Well, I don't want to keep you for too long, but I recently lost my first fully litigated tax case.
Oh, you did?
Yeah, and it was because the judge and the IRS attorney were pretending that they didn't understand what I was saying, because I was trying to say that income is defined differently than gross income, which is the entire reason why I think that the 16th Amendment doesn't really matter. It was just addressing like a fine point, because the Supreme Court has spoken to what income means, but apparently, it's just what gross income is now for most tax court judges. And I found that in my research too, which is obviously are two different things.
Yeah, well, I mean, I've come to believe that the 16th Amendment hasn't been ratified because these people are so dishonest, and they're so dishonest about their own power. They're so biased. Why would they actually look at it objectively? You have something that gives you all this power. Would you interpret it a way that it doesn't give you power? And I think that's way too much to ask out of human beings, especially human beings in a large group, and especially a bunch when there's some who at least will violate it. They'll influence everybody else because, hey, that's just the way it's done. Well, they really go back. So it was actually Wilson who signed the 13th Amendment in there. Same time the Federal Reserve, for some reason, strangely enough, they were both passed at the same time, which is totally legitimate and doesn't raise any questions whatsoever. Well, and then, this is also what you just said, Suzanne, is, how they define income. And, one of the issues that we talk about is the global intangible low tax, whatever, guilty, because they love acronyms, and they just create imaginary sources, not actual income. And they do that again and again. And tomorrow, I'm going to be talking about the imaginary income that we get in mutual funds and PFICs, how that imaginary income happens. And, that's what we have with the IRS. We have the IRS can now create fake income, and they can violate privacy of anyone because one person in the world owes taxes. And here's another thing: how many couples share accounts, have their spouses a signatory, right? But it's all goes whatever the revenue officer thinks, and he doesn't have to support it. He just has to write it down because no one gets the right to challenge it. No one can challenge it. Tough luck. And so let's see. Does this mean that they're fair game to be? Yes, Susan. Yes. So your question is, does this mean that if one spouse partner has a business not related to the other's business, they're now fair game to be targeted for suspected mischief wrongdoing by the other non-related business? Absolutely. But it goes further than that. That it doesn't have to be your spouse. It could be anyone. It could be somebody you don't even know. It's just simply the words of a revenue officer unchallenged. All right, we got to go here. I thank you everyone for joining us today. I really appreciate the comments, and I just want to sign off with Tom. Now, Tom, you're up to something kind of interesting here. What is your focus? What is your business focus right now?
So I've sort of pivoted away from tax resolution, since I was
imagine that.
I like to work, people are just unhappy when they owe money. And I like working with people who aren't in trouble, but are just happy because they're buying and selling things. So I've been doing a lot more transactional work. And then I realized, I represented a few people who were being foreclosed on by the IRS, with the Department of Justice suing to foreclose on them, appointed a receiver. I'm also a realtor. And I realized, it kind of makes sense if you have tax distressed property to unload it and deal with your tax debt before the IRS does it for you, because it's getting to the point with just the way that the market is, where the IRS is more willing to do that with people. So I am developing a bit of a niche in in tax distressed properties, I handle it either as a listing real estate agent and then stay away from the attorney lane, or I handle it as an attorney in a transaction that just sort of has the background knowledge that's necessary to sort of navigate things to make sure that the transaction actually happens to completion and my clients get the most money applied to their tax debt as possible from the sale of their home.
That's pretty good. And I mean, I would say, and I would hope people take the warnings that we're trying to get out there, that look, the IRS fell asleep. They stopped working, which, you know, we stopped working too, because the IRS wasn't there. So they've been asleep for 4 years. And they kind of were a little bit snoozy before that, with their staff going down, down, and down, and down. You know, I'm sure you remember some of the names the IRS hasn't touched in years. People who vote big money. No, we'll get to them later. Well, folks, they're coming.
It's later. Coming. And the IRS is almost out of time. And they can bring a lawsuit to reduce that tax debt to judgment at the same time that they bring a lawsuit to foreclose your tax lien. So why wouldn't they do both in the same action? They're going to.
Right. Yeah, it's going to be, and these revenue officers are just going to be coming, and we're going from we're going to go from a mentality of very little tax enforcement. There hasn't been. It really hasn't been.
Right.
To monstrous tax enforcement that is undefined. That now really, it doesn't have a lot of limits. It really doesn't have a lot of limits because the Supreme Court says it's taxes, and we don't want to limit the people who pay us in any way, because that would be, you know, not a good decision.
Right. We have new collection agents under the gun with more power. What's going to happen?
Yeah, it's good zero. So, all right. So if you have a distressed property, you're looking to sell, a tax issue, you got some property, you might want to reach out to Tom to find out the best way to get out of this. You know, every situation can be made better. That's what I've always signed. You know, we have terrible tax laws, but, you know, not going down the road of frustration and giving up, but fighting, you know, and I think this sort of illustrates what we've always known. You know, and I think that's really it. This really illustrates what we've always been up against. And that's why it's always better if we can get a resolution that doesn't involve a revenue officer. And right now, that's the time. We have a few more months, but I'm telling you, by March, April of 2024, I mean, it's scary. And I mean, the revenue officers are always our best sales agents. They always are. They're like, oh, I thought I was going to deal with it myself and just be reasonable. But then I realized, oh my God, that's a bad idea, because they're nuts and they want to destroy me. And they don't know anything about what they're doing. These are people with no life experience, no context of anything. And they're given them more power than judges, really. IRS revenue officers with their 6 months of training and their 4-year college degree now have more power.
More power,
than a federal judge.
Accountability.
Yeah. So truly frightening stuff. Again, I want to thank everyone for watching. And here's the thing: be sure to subscribe, and you got to turn on those notifications, Tom. Why do they need to turn on those notifications, Tom?
So they can see us live and join the conversation.
There you go. Thanks so much, buddy. All right. Thanks. Well, you know, I hope to have you on again, Tom. Thanks again, bud.
Thanks, Anthony.